No matter how overstated these warnings may have been, I think they're directionally correct. He's saying that the world's headed for a global recession, and directionally he appears to be right. I mean, things look really grim.
Okay, welcome back everybody to Altcoin Daily, where you subscribe for one video per day, demystifying this cryptocurrency market. My name's Austin. I want to share with you a clip of David Sacks, who you just saw, who is a multi-decade tech investor, one of the founding members of PayPal. He's been in markets for years, talking about his projections on the All In podcast of where he sees markets going next. And by the way, this has everything to do with the macroeconomy, the latest CPI numbers, as well as the Fed meeting happening today and tomorrow that'll really set the stage on how markets react, at least for the next month. The minute I get the results of this meeting, I will let you know. I will make a video. Stay with us. But it is projected that the Fed either raises by 75 basis points or a full 100 basis points, both ultra aggressive, yet sort of totally on par from how they've been raising this year. So first, just gotta like the video. I appreciate this perspective. But first, let me play you just 2 minutes of the greater 90-minute episode of the All In podcast. I will link the full episode down below. Check it out. But in this 2-minute clip, listen to why David Sacks agrees that we are headed for an historic macro recession. All markets will continue to go lower, and here's why. Watch this.
No matter how overstated these warnings may have been, I think they're directionally correct. He's saying that the world's headed for a global recession, and directionally he appears to be right. I mean, things look really grim. We just had this inflation report that was much worse than what people were expecting. Inflation was supposed to go down to 8.0%, and actually it was 8.3%. That's why the stock market cratered a few days ago. It was like the worst day in the stock market, I think maybe all year, or certainly since June. We're almost towards the June lows. Now this FedEx executive is saying we're headed for a global recession. So it seems to me that the economic news is just pretty grim here. And we're in stagflation. The Fed has to keep raising interest rates at the same time that we have persistent high chronic inflation. And you have to wonder, I tweeted a few months ago that the White House economic advisor, Brian Deese, he said that in this interview with CNN, that the Biden administration was willing to endure a global recession in order to keep Russia from controlling the Donbass region in Ukraine. Well, mission accomplished. It looks like it's getting its wish. The administration's made some progress in the Donbass, but we are also having a global recession. So
what percentage of this? What percent of the recession and inflation has to do with the Russian invasion of Ukraine?
I think it's meaningful. It's
10%,
meaningful. We know it's a huge exacerbator of all these problems.
What percent, if you were going to put a number on it?
Listen, I don't think the economy is going to get better with the risk of World War III hanging over our heads. How does that work?
All right. Give me your thoughts on that down below. Do you agree with David? Do you disagree with David? Let's all check the comment section together. But in my opinion, whether the Fed raises 75 or this time goes the full 100, it's not going to make too much difference in the long run as long as the direction of the Fed rate hikes is still going up. Now, many people are saying that 75 is sort of priced in. The market is expecting this, as this is what Jerome Powell has hinted that they will be doing, and he has been pretty accurate in doing what he says he's going to do, what he hints he does usually thus far this year, as opposed to 100 that's slightly more aggressive, so I can see more volatility in the short term to the downside if this happens. Now, again, results are tomorrow. We're watching, we're waiting. We'll see how the market reacts. But like I said, what means more to me in the long run is whether these federal funds rate hikes are headed in the up direction or back in the down direction. All of this year, we've been aggressively pushed up, bringing gravity to all markets. Right now, interest rates are around 2.25%, but the Federal Reserve, like we've been saying, is expected to deliver a 75 basis point hike during its September 2022 meeting, which would be the third straight 3/4 point increase, pushing borrowing costs, interest rates, to 3 to 3.25% range, the highest since 2008. So this chart right here is the 25-year chart for interest rates. If/when tomorrow we get that increased to push us up to 3.25/3%, that is the most since the '08 housing crisis. Now, for perspective, interest rates back in 2001 got as high, maybe 2002, got as high as over 6%. Just before 2008, 2007, they got as high as maybe 5.5%. Right now, we're at 2.25, expected 3. But comparing this to US inflation rates, looking at the exact same time scale, 25 years, wow, inflation is so much more than in 2008 or even 2000. So again, what this means to me is until we start seeing this in a confirmed downwards direction, until inflation can be suppressed, I would expect federal funding rates, interest rates, to keep going up. I would expect lower lows in all markets. That's my opinion. I'm not a financial advisor. You make your own decisions. And please share what you're thinking down below in the video comment section. Let's all learn from each other. Now, that being said, that doesn't mean that crypto news is not happening. For the latter half of today's video, I want to share with you the latest news involving Bitcoin, involving XRP, involving Ethereum, and much more. So like always, check the comments. And real quickly, let's start with our top story. Michael Saylor's MicroStrategy has again bought the dip. MicroStrategy has purchased an additional 301 Bitcoins for around $6 million at an average price of $19,851 per Bitcoin. As of today, MicroStrategy holds in total around 130,000 Bitcoins, acquired for almost $4 billion at an average price of around $30,600 per Bitcoin. So Wall Street money is still buying. And keep in mind, he has a publicly traded company. He has to disclose. Think of all the entities buying that aren't disclosing, that we'll never know about, possibly for years to come. So that's Bitcoin. Next up, what's happening with XRP? Well, as of a few days ago, both the SEC and Ripple call for immediate ruling in their suit over whether XRP sales violated securities laws. So the U.S. Securities and Exchange Commission and Ripple Labs both filed motions for summary judgment, arguing that a judge overseeing the case has enough information to make a ruling without moving the case forward to trial. Wow. So we're going to get a conclusion on this one way or another. We're getting an answer. Finally. These official documents were posted to a federal court database on Friday, and because both parties want this, I don't see why a judge wouldn't make a final decision on the case. Now, very quickly, since this appears to be coming to an end, here's just a little reminder on how this lawsuit started. The SEC originally sued Ripple Labs, along with their CEO, Brett Garlinghouse, and Chairman Chris Larsen, back in December 2020, one day before former SEC Chair Jay Clayton stepped down from his role, on allegations that Ripple had raised over $1.3 billion by selling XRP in unregistered securities transactions. And of course, this all comes down to the Howey test, which is defined in simplistic terms. Was there an expectation of profit from a common enterprise based on the work of others? Well, the SEC argued, among other things, that various statements by Ripple's executives demonstrate that Ripple sold XRP, and XRP investors bought the cryptocurrency with the belief that their holdings would spike in value over time. Yes, I believe that. I think that's why we all hold cryptocurrency, because we want it to appreciate. The question is, did Ripple use that language and suggest that? Well, the SEC said in their filing originally that Ripple publicly touted the various steps it was taking and would take to find a use for XRP and to protect the integrity and liquidity of the XRP markets. That's a simplified version of the SEC side. And of course, for their part, for Ripple, was that there was no contract between the company and the XRP investors, and that there was no common enterprise, one of the requirements under the Howey test. So Ripple's saying that just because investors bought XRP on a secondary open market, they never went into an agreement with them. So we'll see. It's now for the judge to decide, and we should have an answer soon. And next piece of news, if you had your coins in now bankrupt Voyager, Alameda to repay $200 million in Bitcoin and Ethereum to bankrupt crypto broker Voyager. And just to be specific, another way of saying this would be, Voyager Digital, the now bankrupt crypto brokerage firm, will see its approximately $200 million outstanding crypto loan to Alameda Research returned, according to a court filing published Monday. So before Voyager went bankrupt, they did loan out money to Alameda, and now they're getting that back. Per the filing, Alameda will return Voyager about 6,500 Bitcoin and about 51,000 Ethereum by the end of this month, September. Now, how that affects you could be one of two things. Worst case, this could be sell pressure on the market. They could use this to sell off to get cash that they need because they're insolvent. Or two, maybe they'll use some of this to return the Bitcoin and ETH to their customers. We'll see. And while Voyager gets the BTC and ETH, they're giving back to Alameda their collateral. The court documents also revealed that Voyager will return the collateral tied to the loan back to Alameda, including $4.65 million in FTX token and 63.75 million Serum tokens, part of the Solana ecosystem. So I am waiting and watching for new information, but hopefully some of that money, ideally, is returned to the customers. We'll see. All right, that is the video. My name's Austin. Like always, appreciate you. But like always, see you tomorrow.